Hello and welcome to this session in which we will keep working with the various types of partnerships. In the prior session, we covered general partnership, joint venture partnership, limited liability partnership. In this session, we will focus on LP, limited partnership. Now, it will be very helpful if you understand what a general partnership is versus a limited liability partnership before you start this session. So let's talk about limited partnership or LPs. A limited partnership involves two kinds of partners. It doesn't have to be two, but two kinds. One partner we called a general partner who manage the business and are liable for its debt. And we have a limited partner who invest money but don't manage the business and have limited liability for their investment. Here's what I want you to think about. We have two individuals. This individual wearing blue with the money. This is the rich individual, the venture capital, the person that won the lottery, whatever. And this individual with a business idea, with a business plan, with an idea. So this individual with the idea don't have money. So they will go to this individual with the money, with the blue suit, and say, look, would you like to go into the partnership with me? Now the blue guy with the blue suit is like, you know what? I don't understand your business that much. I don't understand business overall. But I might be interested in investing with you, but I have to be very careful. Whatever I invest, that's the maximum amount I would lose. They would say, okay, why don't you become a limited partner? So they will form this partnership as a limited partnership. So the guy that's limited partner will give the money to the person, to the general partner who run the business, not sells, sells the product, but run the business. Now, for a limited partnership to exist, for a limited partnership to exist, we need to have one GP, general partner. No limited partnership exists without a general partner because you need one person to be what? To be liable for everything, fully liable for the debt. Because you could have, for example, in a limited partnership, you could have 10 LPs, 1 GP. You could have 10 GP, 1 LP. It doesn't matter. But you have to have at least one general partner for a limited partnership to exist. Of course, you're going to have one limited partners, but you need to have one person that's going to take the fall. Okay? So this structure allows some partners to control the business while others contribute the funds without fully assuming liabilities. So this is the mentality that I want you to be thinking about as we go into the limited partnership. The limited partners are limited. They provide the funds. The general partner are fully invested in this, are fully responsible for any downfall that the business takes. Let's discuss a little bit more in details. Before we proceed any further, I have a public announcement about my company, FarhatLectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses, broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. Life of limited partnership. By default, a limited partnership isn't designed to exist forever. So there's a lifespan, it's not perpetual, unless the partnership agreement explicitly state otherwise. What does that mean? It means that the partnership is typically set up for a specific duration or until a certain event occurs, after which it's dissolved unless the partners agree to extend its life. The formation and structure of a limited partnership is formed by filing a certificate of limited partnership. So you have to file. There's an official paperwork you have to file with the state, detailing the partnership's name, purpose, and partners and partner. You want to make sure you file and you are identified as the limited partner. This structure does what? Permit investment without management responsibilities or risk for the limited partners. Now, what is the role of the general partner, GP, partners or partners? You need at least one general partner. In the limited partnership, the general partner are solely responsible for management, similar to the general partnership. Why? Because they bear the responsibility for all the debt, meaning their personal asset is at risk for the liability of the partnership. Therefore, if you're managing the business, you want to stay awake and pay attention because your personal asset is on the line as a general partner. Also, The general partner can have a limited partner or can also be a limited partner or act as a creditor to the partnership either in a secured or unsecured transaction. So in what sense? The general partner can lend money to the partnership. So this is a dual role. So you could be a general partner and a lender. So if you're a lender, well, your money, you are a creditor. You can have that dual role. Allow them to be both managers, management responsibilities, and have financial interest in the partnership. That's allowed. So a general partner can also lend money to the partnership. A limited partner's financial risk is limited to their investment and any promised but unpaid capital contribution. That's it. That's their financial risk. They are not responsible, personally liable for the partnership debt beyond this amount. That's it. Whatever they invested or they promised to invest and they haven't invested, but they put it on the line, they're responsible for that. They play no management role. Limited partners do not partake in management. They don't participate in management. They don't make management decisions. They are not considered agents of the partnership. Therefore, they cannot make decisions on behalf of the partnership. It's like being a stockholder. When you're a stockholder in a company, for example, if I own stocks in Apple Computers or Amazon, yes, I am an owner, but I cannot be an agent. I cannot work for these companies. Same thing with the limited partner. Think of the same concept. And generally cannot make decision or enter into contract on behalf of the business. No management role. Rights to information, of course, despite their non-management role, limited partners have the right to access the partner's financial data and tax return because they're investors, they want to see what's going on. And if you own stocks in a company, you can take a look at their 10K. But the limited partner, because usually it's closer relationship, you can actually see their books, the record, you can inspect those because you are an investor in this partnership. You are a limited partner. Now, how about if there's any major decision? Well, under the Uniform Limited Partnership Act of 2001, limited partners can engage in management decision without incurring personal liability. How? They can vote on significant matters such as admission or removal of a general partner, the dissolution of the partnership, changes to the partnership agreement, sell most of the partnership asset. Here we are looking at major decision that's affecting the partnership. If you want to admit a new partner, if you want to terminate the partnership, if you want to sell most of the asset, well, you're closing up. I need to know as a limited partner, as an investor, what's going on. Can they assign their interest? And the answer is yes. A limited partner can transfer their interest in a partnership. This assignment grants the assignee the right to the limited partner's shares of the profit. Now, if you assign all your partnership interests, all of it, if limited partner assigns their entire interest, they typically cease to be a partner unless agreed otherwise. How about adding new partner? Incorporating a new partner into a partnership requires the consent of all existing partners. And this goes back to making a major decision. No fiduciary duty. Unlike general partnership, limited partners are not obligated to act in a fiduciary duty. They're not agent of the partnership. This means that they are not legally bound to act in the best interest of the partnership. Simply put, they are investors. They invest and they move on. How about profit and loss? How is profit and loss is distributed? The distribution of profit and loss in a limited partnership is primarily determined by the agreement. So they will have an agreement. If the partners have specified in the partnership agreement how profit and loss should be allocated, well, those terms will dictate the distribution. How about if we don't have an agreement? What would happen? Well, you have to be careful here. In the absence of a specific agreement, profit and losses are typically shared among the general and limited partner in proportion of their respective contribution to the partnership, not equally. If you remember, in the GP, in the general partnership, in the absence of an agreement, also we saw this in the LLP, in the absence of an agreement, profit and loss are shared equally. Here, in the absence of an agreement, what do we have to do? We would look at the proportion of the respective contribution. What does that mean? So if we have three partners, A, B, and C, and there's no agreement on how to allocate the profit. If A contributed $50, B contributed 20, and C contributed 100, total is 100. A is 50%, which is 50 divided by 100, 50%. B is 30%, and C is 20%. In the absence, this is how we will distribute the profit and allocate the losses. This means that the share of the profit or loss received is based on the value of what they have contributed to the partnership, whether in the form of capital or other resources. It's important to note that a limited partner's liability for the losses is limited at the level of their capital contribution. This is how much you can lose. This means that a limited partner cannot lose more what they have invested in a partnership, regardless of the partnership overall losses. You could only lose up to what you invested. And that's why, you remember at the beginning, we said, you know what, I want to invest in your business, but I don't want to take on a full risk. And this is why my liability is limited to the amount that I invested. Termination of a limited partnership, the dissolution of a limited partnership can happen in several ways. One is some event happened, specified time. We agreed on a specific time, or once this project is done. If the partnership agreement include a specific time or event that triggered dissolution, the partnership will end when that time comes or the event occur. And this could be predetermined date or a specific occurrence, the completion of a project. Well, or we can all agree the partnership can be dissolved if all partners agree to it in writing. This means that every partner, both the general and limited, must provide a written consent. We can agree it. Of course, it's at will. Change in general partners. The withdrawal or death of a general partner can lead to the dissolution of the partnership unless the partnership agreement specified otherwise or the remaining partners agree to continue. Because remember, general partners you have to have them. You cannot have an LP without a general partner. Someone will have to take the fall. So you have to have one GP. Obviously, a court order can dissolve the partnership. This might happen in case of legal dispute, bankruptcy, or when the partnership is deemed unlawful or incapable of continuing its business. Again, it's important to note that a limited partnership, the death of a limited partner does not lead to the dissolution of the partnership. So if a limited partner is died, it doesn't mean the partnership is done. But if we have one GP and that GP is gone, then we don't have a limited partnership technically because we need one general partner. So what happened when we distribute the asset in a liquidation? Because once we are done, we have to sell all the assets, cash out all the non-cash asset, and sell them, liquidate them. Well, upon dissolution of a limited partnership, the distribution follows a specific order. First, we have to pay the creditors. The first priority is to pay off all creditors of the partnership. This includes any partners who have also acted as a creditor to the partnership, lending it money or resources. Remember, what we said is a general partner could also be a creditor. Then we have to settle liabilities with former partners. Former partners are partners that are not current partners. The next step is to pay any outstanding liabilities to former partners, because sometimes what happens, partners leave, they leave, but they still the partnership still owes them money, so we have to pay those as well. This includes any amount owed to them from their time in the partnership or any unpaid due upon their withdrawal, and we have to pay them. First we pay the outside creditor, including the inside creditors, then we pay former partners. Great to be a former partner, just not working and getting paid, right? Then we have to give back money to the partners, returning contribution and distributing profit to the partner. Finally, the remaining assets are distributed to the partners. Initially, the partner received back their initial contribution to the partnership. After all contribution had been returned, any remaining profit then distributed among the partners. How about if we have a loss? In other words, we are liquidating and we have a loss. Well, only the general partner are personally liable for any losses. This means that they have to cover the losses from their personal asset if the partnership assets are insufficient. So if we still have unpaid bills, who's going to come up with the money? There we go, general partners. How about limited partners? Not at all. Limited partners don't have personal liability more than their initial capital contribution. That's it. That's the amount that they were willing to lose from the beginning, and that's the end of it. Their loss is limited to the amount they invested in a partnership, and that's why we call them limited partners. Limited in terms of losses. If we have losses and the partnership cannot cover, they're not responsible for it. Who is responsible for this? The general partner. They are personally responsible for the losses. Let's take a look at this multiple choice questions from farhatlectures.com. How is a limited partnership formed? Well, by an oral agreement among partners. Well, does it have to be in writing, or would an oral agreement would do? I would say no. We need more than just an oral agreement. I would say out. Now, a contract can be formed orally, but not a limited partnership. Out. Through a handshake. Well, not at all. Not an oral, not a handshake. By filing a certificate of limited partnership with the state. Do you have to file officially with the state if you want a limited partnership to be formed? And I would say yes, and a big yes. If you're a limited partner and you want to protect your interests, in other words, you want to lose up to the amount that you invested and no more, because that's your role. That's what you wanted to do. You wanted to invest an amount of money, and maximum is lose that amount of money. You have to file with the state. I would say C is a good answer choice. By posting a public notice in the newspaper, that's good for advertisement, but that's not gonna form a limited partnership. That's no. The answer is indeed C. You have to file with the state. By filing a certificate of limited partnership, it's a legal requirement to form a limited partnership, especially if you are the limited partner and you want to do what? Protect your interest. The other options are incorrect. What should you do now? You want to go to Farhat lectures and look at MCQs, additional resources that's going to help you, whether you're studying for your CPA exam or taking a business law accounting courses. Invest in yourself. The CPA exam is worth it. Farhat lectures is always here to help, and stay safe.